following program is furnished by The Truth About Your Future, LLC. The views expressed do not necessarily reflect the views of this station. This information is education and not financial advice. Consult a financial advisor before investing.
The Truth About Your Future with Rick Edelman is brought to you by Bitwise, the world's largest crypto index fund manager, and by Global X ETFs. For more than a decade, Global X ETFs has been dedicated to providing investors with unexplored and intelligent solutions, and by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100, and by Edelman Financial Engines. Rick Edelman is a board member, consultant, shareholder, and client of EFE, but EFE is unaffiliated and has no say over the content of The Truth About Your Future with Rick Edelman.
This is where technology, innovation, and personal finance come together.
This is The Truth About Your Future with Rick Edelman.
And now your host, Rick Edelman.
Welcome to the program. You're listening to The Truth About Your Future, and I'm getting a lot of questions from folks, a lot of emails and calls from listeners saying, how do I do it? You know, I go to my financial advisor and they tell me that I can't. They tell me they can't help me, or there's no easy way to buy digital assets. That, I'm here to tell you, is utter and complete and total nonsense. It is incredibly easy today to add digital assets to your portfolio. And any financial advisor who says otherwise is ignorant, arrogant, or a flat-out liar, because it has never been easier. Let me just illustrate for you the wide array of ways that you can do this, that anybody can do this. There are publicly traded Bitcoin mining companies. These are companies that engage in the complex computer calculations to generate Bitcoin. BitDigita, Bitfarms, Argo Blockchain, Bitmining, Cipher Mining, Galaxy Digital, Hive Blockchain, Hut8 Mining, Marathon Digital, and Riot Blockchain. These are all publicly traded companies that are exclusively involved in Bitcoin mining. You can buy these stocks like you can buy any other stock as part of your portfolio at any brokerage firm, and yes, with any financial advisor. There are ETFs that invest in Bitcoin futures. They're available from Global X, ProFunds, Valkyrie, and Van Eck. These are ordinary, routine ETFs that allow you to engage in Bitcoin futures contracts. There are even OTC securities that allow you to buy Bitcoin, Ethereum, and Litecoin. These are available from Grayscale, Osprey, and Bitwise, and they're all available from your brokerage firm. There are even publicly traded stocks that are kind of like a proxy for buying Bitcoin. MicroStrategy is one of the world's largest business intelligence companies, and the company has been buying a lot of Bitcoin. They now hold over $7 billion worth of Bitcoin in their company treasury. So these days, analysts figure buying shares of MicroStrategy is pretty much a proxy for buying Bitcoin itself. And oh, by the way, you have the revenues of the company to support the investment as well. Tesla is another company that owns a lot of Bitcoin. So you can buy MicroStrategy stock or Tesla stock as part of your brokerage account, just like any other stock. In fact, there are now also dozens of ETFs that invest in the crypto community. These are ETFs that buy publicly traded stocks of companies that are building the infrastructure. They're not investing in Bitcoin directly. What they're doing is investing in the companies that are helping to build and support the overall crypto community. It's sort of like, we call it the picks and shovels method of building and buying. Where does that picks and shovels name come from? Oh, the old joke goes back to Levi Strauss. You know, back in the California gold rush, back in the 1850s, Levi Strauss went west. He went to San Francisco, but he never went digging in a mine for gold. He just sold blue jeans to the gold miners. That's known as the picks and shovels strategy. Don't mine for gold, sell the gold miners products they need. Picks and shovels and blue jeans. So Levi Strauss made more money than any gold miner did. And that's the story. So don't invest in Bitcoin. Invest in the companies that are helping to build the technology, that are helping to build the businesses around it. There are a whole bunch of ETFs that you can buy that invest in this asset. The Bitwise Crypto Industry Innovators ETF. The symbol is BITQ. The First Trust Innovative Transaction and Process. The symbol is LEGR. The Skybridge Crypto Industry and Digital Economy ETF. The symbol is CRPT. The Siren NASDAQ Next Gen Economy ETF. The symbol is BLCN. The Amplify Transformational Data Sharing ETF. Symbol BLOK. The Van Eck Vectors ETF. Symbol DAPP. The Global X Blockchain ETF. Symbol BKCH. The Invesco Alarian Galaxy Crypto Economy ETF. Symbol SATO. The Invesco Blockchain Users and Decentralized Commerce ETF, symbol BLKC. Ordinary ETFs that simply focus on blockchain and digital assets. A huge laundry list available to you through any brokerage account and any financial advisor. In fact, there are ordinary ETFs that do own Bitcoin. They do it by owning the Grayscale Bitcoin Trust, symbol GBTC, which is inside these ordinary ETFs. The Kinetics Internet ETF, WWFX, the Global ETF, WWWEX, the Market Opportunities ETF, KMKNX, the Small Cap Opportunities ETF, KSCOX, the Paradigm, WWNPX, the RG Aram Plus, GLDPX, the ARK Next Gen Internet ETF, ARKW, the FOMO ETF, FOMO, the Emerald Financial and Banking ETF, HSSAX, the Appleseed, APPLX, and the Simplify Equity Plus GBTC, the symbol SPBC. Am I totally blowing you away with all these symbols, all these letters, all these initials? Well, that's what I'm trying to do. I'm trying to simply illustrate for you that there is a wide array of ETFs, individual stocks available in the open marketplace that you can buy on your own in a brokerage account, and which, yes, believe it or not, your financial advisor can provide to you too. Just like they provide any other ETF, these are available too. And I'll take it a step further. There are certain investment management accounts that are generally available only through financial advisors. These are called SMAs, separately managed accounts, and TAMPs, turnkey asset management programs. These SMAs and TAMPs are favored by financial advisors because they're basically customized mutual funds. You know, a mutual fund is where everybody puts their money into a fund and they all have the identical holdings of the fund. With an SMA or a TAMP, it's custom built. Imagine a mutual fund where you're the only owner. That's what SMAs are and TAMPs. Financial advisors love to provide these to their clients, and they're available in the world of Bitcoin and blockchain from companies like BitGo, Blockchange, Choice, Digital Asset Investment Management, Eaglebrook Advisors, Fidelity, Gemini, Height Zero, NYDIG, Sarson Funds, SFOX. And if you're an accredited investor, meaning you have a net worth of $1 million or more excluding your home, there are private placements available for you to invest in digital assets from Skybridge Capital, Galaxy, Crypto Lotus, Morgan Creek, 10T, IDX, Multicoin, Pantera, and Van Eck. There are even these private placements for accredited investors that invest in the picks and shovels route. The Pantera Blockchain Fund, the Castle Island Ventures Fund, the Blockchain Capital, Galaxy Digital. And you can even do all of this in an IRA account through your financial advisor from Bitcoin IRA, Blockchange, Choice, Eaglebrook, iTrust Capital, Madison Trust, Prime Trust, and TradeStation. Is that a long enough laundry list for you? Have I kind of blown you away with all that detail? Maybe even bored you a little bit? My point is very simple. Today, blockchain and digital assets have grown up. They are radically different than they were 5 or 10 years ago. Quite frankly, even radically different than just 3 years ago. It is now incredibly simple and easy and cost-effective to add this new emerging asset class into your diversified portfolio. Any financial advisor anywhere should be able to allow you to do this with their help, so that they can provide all the services they provide to you for the rest of your portfolio management, rebalancing, diversification, tax loss harvesting, and tax management on an annual basis. There is nothing unique, different or unusual about this asset class than there is about any other thematic asset class available on Wall Street. So any financial advisor who says to you, I can't help you, it's not easy, there's no easy way to do this, they either don't know what they're talking about or they're outright lying to you. On the other hand, there are thousands of financial advisors all across the country that are willing and able to help you. And if you need help finding one of them, just go to the DAC-FP Advisor Directory. That's why I created the Advisor Directory. It's available to you for free at dacfp.com, the Digital Assets Council of Financial Professionals. These advisors who are in the Advisor Directory hold their certificate in blockchain and digital assets, and they can help you determine, should you add this to your portfolio? And if so, how much of your portfolio should you put in it? And which of the investments that I mentioned earlier are the ones that are right for you? These are financial advisors who work at independent firms and major brokerage firms, even insurance companies all over the country. And the only thing they all have in common is they have obtained their certificate in blockchain and digital assets, demonstrating their proficiency in this subject matter. And oh, by the way, if you want to manage this all on your own and you're wondering where can you get that big, long laundry list I just went through, that's also available at DAC-FP. It's the Yellow Pages. And in the Yellow Pages, which is also free for you, is a listing of all of the investment opportunities, all of the companies offering investments that you can consider. So you can go to DAC-FP, that's DACFP.com, for both the Advisor Directory and the Yellow Pages. All of it available for you for free. Don't let an advisor tell you that they can't help, because they can if they want to. You're listening to The Truth About Your Future. I'm Rick Edelman.
Allow us to introduce you to Sabrina, an ordinary person who helped shape the future by putting her money behind the right ideas. Each morning, Sabrina enjoys a 20-mile bike ride and meditation that brings her serenity for the day to come. Sabrina is also accessing the companies that are revolutionizing the tech world by investing in Invesco QQQ. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100, which goes to show you don't have to be an integrated circuit engineer to help push progress forward. Become an agent of innovation. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus with this information. Read it carefully before investing.
Want to invest in digital assets but find it all a bit complicated? There's actually a very easy way that you can invest in this new asset class. Simply choose the Bitwise 10 Crypto Index Fund, symbol BITW. It's the first and still the biggest crypto index fund. It owns the 10 largest digital assets and rebalances monthly, so you don't have to decide what to buy or when to rebalance. Bitwise does it all for you. At Bitwise, we want digital assets to be available to everyone, and that's why we work closely with individual investors like you, as well as financial advisors and institutions. At Bitwise, crypto is all we do. If you believe digital assets should be part of a diversified portfolio, take a look at the Bitwise Crypto 10 Index Fund, symbol BITW, available everywhere you get your investments. There are major risks to consider, including the loss of your entire investment. Before investing in crypto funds, visit bitwiseinvestments.com to learn about the risks with these investments.
Hi, I'm Soledad O'Brien.
And I'm Jean Chatzky.
And we have known each other for a very long time, and now we're co-hosting a radio show. It's called Everyday Wealth, presented by Edelman Financial Engines. It's coming up next.
Everyday Wealth is all about the financial decisions that shape our lives.
And it's about looking at wealth as something more than just money. It's about your goals and your dreams and living the life you want.
Each week, we're joined by Edelman Financial Engine's planners, the folks on the front lines working with people and their money every single day.
We look at how market events and policy updates impact our financial well-being.
We break down challenges from generational wealth planning and tax-efficient investing to charitable giving and caring for aging parents.
So join us in the next hour for Everyday Wealth, presented by Edelman Financial Engines. You can also find our show on major podcast platforms or at everydaywealth.com/radio.
Welcome back to The Truth About Your Future. Got a question for me? Just record your voice on your smartphone, send me the file to askrick@thetruth.com. That's what Joel did. He's in Long Island. Here's his question.
Hi, Rick. This is Joel from Long Island. I've been a huge fan of yours for decades, having read most of your books and seen and heard all of your shows. Thank you so much for everything that you've done. With regard to a typical portfolio in retirement of, say, 55% equities and 45% bonds, how do you suggest one handles the bond portion of the portfolio going forward? We are still looking at a 30-year time horizon, so should we continue to rebalance with this in mind? Or do you foresee other long-term changes in asset allocation for people in the retirement? Furthermore, I know you're very bullish perhaps with regard to cryptocurrency. Do you truly see a place in cryptocurrency in a retirement portfolio of even 1%? I'm anxious to hear your reply. Thank you so much for your time.
Joel, thanks for your questions and your kind words as well. I'm very negative on the bond market these days. I think everybody is, for the simple reason that interest rates are very low and rising. And as interest rates go up, the value of bonds goes down. Now, if you have a 30-year outlook, glad that you do, you could argue, this too shall pass. Over 30 years, it's reasonable that interest rates may return to where they were, but is that reasonable? Interest rates never hit as low as they did in the past 10 years. If interest rates never go back down to where they were, then the bond prices will never go up to where they were. In other words, the losses that exist in the bond market, the losses that may yet occur from further increases in rates, could become permanent. So I'm not sure if it is worthy to keep long-term bonds in a portfolio right now, especially since further losses are anticipated due to further increases in interest rates. So I don't know what you should do other than talk with your financial advisor about it. I can tell you what I'm doing. I don't own any bonds. Gene and I got rid of all of ours because we just don't see how the case is justified, not only from the risk of loss, but from the incredible low return that they're probably going to deliver compared to other asset classes over the next 5, 10, 20 years, particularly not just the broad stock market, but more specifically exponential technologies, and even more specifically than that, blockchain and digital assets. So for all those reasons, I'm not sure that it makes a huge amount of sense. There are other ways to get income-producing investments into your portfolio that are at least as good as the prospects that you might get from the bond market. There are so many income-building strategies. Any good financial advisor should be able to relate all of that to you based on your circumstances. As for crypto as part of your retirement portfolio, sure, a 1% allocation I think makes a great deal of sense regardless of age. This is the newest asset class, the first new one since oil was discovered in Texas in the 1850s. So sure, adding 1%, maybe 2% of a portfolio to this asset class, I don't see any reason why not to do that. So talk with your financial advisor to see what is applicable, makes most sense, and is in your best interest for your circumstance. But I think your thinking is along the right lines, Joel. If you would like to ask me a question as Joel did, just send me your audio file to thetruth.com. You know, The Truth About Your Future is not just a radio show and podcast. It's now also a newsletter. And you can subscribe 12 monthly issues, 16 pages every month, print and digital, that covers everything we talk about here on the show and a lot more. As a subscriber, you get access to special events and unique discounts, and if you subscribe right now, it's just $39, just about $3 per issue, a savings of 50%. If you'd like to subscribe, just go to thetruthayf.com. That's thetruthayf.com. You're listening to The Truth About Your Future. I love to bring you the latest innovations that are coming in the field of science and technology. Michael Riccati was paralyzed from a motorcycle accident in 2017, but he's now walking thanks to a spinal cord implant. It bridges signals from his brain to his lower muscles, skipping the damaged spine. And it took just 1 day of stimulation. Swiss Federal Institute of Technology implanted electrodes that are placed directly onto the spinal cord using an iPad. The implants can be adjusted to support any given activity: standing, walking, swimming, biking, letting people stimulate their own spinal cord neurons, kind of like hitting keys on a piano. You know, water scarcity is a growing problem around the world. Desalination is the only real solution, but it's expensive, complex, creates salty byproducts that are hard to dispose of. A new desalination method has been introduced for small-scale water purification. Researchers from China and MIT think their device could be commercial within just a few years. It uses sunlight for heat and natural convection made of really cheap materials. It's wick-free, so there's no crusty buildup clogging the system. The team's now trying to scale up the device. They think their desalination system, with a surface area of just 1 square meter, could yield enough clean water to meet a family's daily drinking needs. And it costs just $4. Scientists in Israel have trained goldfish to drive. Say what? Yeah, using motion sensing technology, a team at Ben Gurion University trained fish to reach a target using a fish-operated vehicle. They used food as positive reinforcement. I'm not making this up. They trained 6 goldfish with 10 driving lessons, and they were then able to operate a vehicle specially built for them to reach their target, regardless of the starting point, while avoiding dead ends. Want to learn more about exponential technologies? Read my New York Times bestseller, The Truth About Your Future. Stay with us.
The Truth About Your Future is sponsored by Global X ETFs. Exponential technologies are transforming the world around us and creating new investment opportunities in the process. But where to start? At Global X, we've spent more than a decade focusing on long-term emerging trends, what we call thematic growth. While many of these innovations are already part of our daily lives, from cloud computing to telemedicine and e-commerce, some of the most important breakthroughs are actually harder to see. The rise of blockchain, lithium batteries, and the Internet of Things represent just a few examples. Despite being less visible today, we believe these and other forms of next-generation infrastructure will be essential to powering our economy in the future, unlocking potential for financial, transportation, and communications networks in the process. Visit globalxetfs.com to learn how thematic investing can complement your portfolio, or ask your financial advisor.
Did you know Schwab offers a satisfaction guarantee? If for any reason you're not completely satisfied, Schwab will refund your fee or commission and work with you to make things right. You won't find that kind of promise everywhere, but you will find it at Schwab. It's just another way that they put clients' interest at the heart of everything they do. Learn what's included and how it works at schwab.com/satisfaction. That's schwab.com/satisfaction.
Choice is changing the way Americans save for retirement by making it possible to invest in Bitcoin, crypto, and other alternative assets inside your IRA. That's right. When you open both a deductible and a Roth IRA with your Choice account, you can buy real Bitcoin and or any of 22 other digital assets. In your Choice account, you can also buy stocks, mutual funds, ETFs, gold, real estate, you name it, all in a single retirement account. There's no hidden fees or account minimums, and you get more control over your retirement savings. You can also access Choice via your financial advisor. So if you have a professional managing your money, tell your advisor to get set up with Choice so they can help you access Bitcoin and other alternative assets in your retirement account. Head on over to retirewithchoice.com/Rick. That's retirewithchoice.com/Rick.
Welcome back to The Truth About Your Future. And the future's bright, right? Because we're all projecting we're going to be living to age 90, 100, 110, 120. How exciting is that? Unless you become fearful that your future health won't be all that much fun. And the biggest fear that all of us have about aging and health is Alzheimer's and dementia. Increasingly, we are encountering family members. Chances are you know of someone who has Alzheimer's. It is a terrifying disease. And the question that we all have is, am I going to develop these symptoms? Well, right now there's no diagnostic tool. However, British scientists have now developed artificial intelligence that can predict whether you're going to develop dementia. They gave the AI data on 15,000 people, average age 72. The data included medical records, memory tests, and family health history. And the computer named 1,568 people who it said were going to get a dementia diagnosis within 2 years. 2 years later, sure enough, 92% of those people got the diagnosis. This new technology could be revolutionary if it is proven to be as effective as that on a long-term, broad-scale basis. If this proves true, it could give doctors a basis for recommending lifestyle changes to you and identifying people who might benefit from support or in-depth assessments. Predictive tool, step number 1 in our efforts to fight this dreaded disease of Alzheimer's. I'm Rick Edelman. This is The Truth About Your Future. Two of the most popular investments in the country right now, ETFs, generally speaking, their most popular investment with $1 trillion of inflows in 2021, and crypto. Bitcoin is increasingly a very popular investment. About a quarter of all U.S. adults now own Bitcoin, and yet there is no Bitcoin ETF yet. Why not? Well, to help us dive into that question and to understand what Bitcoin is and crypto and where it's all going, let me bring back onto the program my good friend Matt Hogan. He is not only Chief Investment Officer of Bitwise Asset Management, he's a former CEO of ETFs.com. Matt, welcome back to the program. Always good to have you on with us.
Thanks for having me, Rick. Delighted to be here.
You can invest in pretty much anything you want via an ETF or a mutual fund, stocks, bonds, government securities, real estate, gold, oil, commodities. But there's no way that you can buy a mutual fund that invests in Bitcoin or an ETF that invests in Bitcoin. Why not?
Yeah, well, the short answer to that question, Rick, is because the SEC won't let us yet. Bitwise is one of the firms that has filed for an ETF. We've actually submitted 200 pages of research to the SEC, trying to demonstrate that this market is mature enough, institutional enough, and well protected enough to allow an ETF. Look, I'm hopeful that we'll get one this year, but I've been saying that for a few years now, Rick. I do think long-term, the approval of a Bitcoin ETF will impact the price of Bitcoin in the same way, honestly, that the approval of a gold ETF in 2003, 2004 had an impact on the price of gold over time because it makes it easier for mainstream investors to buy. Look, Bitcoin is a simple investment in some ways. It's always a question of supply and demand. And because the supply is fixed and known, 21 million Bitcoin, doesn't matter how much more we want, that's all we're ever going to get. It really just comes down to demand. So if an ETF unlocks new demand, which I think it'll help financial advisors buy it, it'll help retail buy it, it'll help institutions buy Bitcoin. It should have a long-term positive impact on the price of Bitcoin.
And it kind of makes sense. I mean, everybody has their own style of investing. You might be the kind of a person who likes to buy stocks. You might be the kind who likes to buy mutual funds, who likes to buy separately managed accounts, SMAs, or someone who likes to buy private placements. You might like to buy individual pieces of real estate for rental income. And then there are others, if you have a certain style of how you like to buy your investments, you're only going to buy a given investment if you can do so on the platform you like. If you're an ETF buyer, you're not going to buy an investment unless it's available through an ETF. So if there's no Bitcoin ETF, you're not going to buy Bitcoin. But if it is available as an ETF, suddenly you will buy it. There are lots of financial advisors who only provide ETFs to their clients. No Bitcoin ETF, no Bitcoin. So by your notion, the advent of an ETF will bring into the marketplace tens of thousands of financial advisors and their millions of clients, and that will increase the demand for Bitcoin. And since the supply is limited, the price would therefore go up. So if those two predictions are correct, the SEC will say yes to a Bitcoin ETF, and by doing so, the price will rise. Doesn't that suggest that people should be buying Bitcoin now instead of waiting until after the ETF becomes available?
My point of view is that many people should be allocating to crypto in their portfolios. And absolutely, we are on a journey. It's not just the ETF, of course. We've been on this journey of it getting easier and easier to buy Bitcoin. 10 years ago, you had to be a computer scientist to buy Bitcoin. You had to know how to code, to run your own mining node.
So in 2021, Bitcoin hit its all-time high of over $60,000. It dropped dramatically, a 50% decline, the fifth time since 2013 that Bitcoin has fallen 50% or more. Tell me what your views of Bitcoin's decline mean and what you see as its future.
I think there's some tax selling going on to pay for gains in crypto that people realized in 2021. But the long-term trends that are supportive of the price of Bitcoin are incredibly intact.
I think we simply have to be a little patient. We need to remind ourselves sometimes that crypto is only about 12 years old. Bitwise released a survey of financial advisors. You do this on an annual basis. The 2022 survey results just came out. Talk about the highlights, because there's one set of statistics in there that kind of freaked me out, but you talk about what you saw as the highlights first.
Yeah, first and foremost, why is it important? It's important because financial advisors control the bulk of private wealth in America. And so how they're focusing on the crypto market or not tells us a lot about where crypto is going. One, we ask what percentage of financial advisors are allocating to crypto in client accounts. And when we started this 4 years ago, Rick, that percentage was 4, which is not very many, 4 out of 100 financial advisors. And it's crept up. It went from 4 to 6 to 9 to 16 this year. And by the end of this year, based on our survey, it's estimated that over 30% of financial advisors will have allocations to crypto in client accounts. People think about that sort of hockey stick sign. We're right at the elbow of that hockey stick. It takes a while for those early gains to compound, but now we go 16, 30, 60, and then it's basically everyone, right? That's in the next 2 years. The other thing, which I really love, we always ask financial advisors, are you allocating to crypto in your personal account? And that changed dramatically last year. That's always been in the 10, 15, 20% range, a little bit more than clients. Last year, it went from 24 to 48%. 48% of financial advisors allocating to crypto in their personal accounts. And one thing I know from Bitwise is once financial advisors allocate themselves, it's only a matter of time until they start allocating for their clients. So this left me very bullish that we're at that crux in the hockey stick where we start to see financial advisor allocations really take off and take off in an exponential compounding way.
Well, great minds think alike. Those were the two key numbers in your survey that I focused in on. But my take on it is a little bit different. Yes, all the excitement, bullishness, the suggestion of where this is all headed. But I saw something else from a fiduciary perspective of advisors. If nearly half of advisors are personally buying Bitcoin and only 16% are recommending it to clients, I just wonder if there's a fiduciary problem here. The advisor's job is to serve the client's best interest. Are you telling me that an advisor feels that this investment makes sense for their own personally diversified portfolio, but they're not going to recommend it for their client? And if I was the client, how would I feel if my advisor said to me, hey, I think you should own Bitcoin. I bought it 3 years ago when it was a quarter of the price that it is today. Are you kidding me? Am I missing something here, Matt? Or should clients be indignant if they were to discover that their advisors own crypto and they haven't talked about it with them?
I think it's a fair point. I think advisors should be talking to their clients about crypto. And if they own it in their own portfolios, of course, they should be talking about it soon. I'm going to give them a grace note. I'm going to hope that they recently bought it and are kicking the tires and they plan to have this conversation in Q1. But you know me, Rick, I'm an eternal optimist. I always give people that benefit of the doubt. That's what I'm hoping is true.
Our job as financial advisors is as a fiduciary serving the client's best interest. And if I'm a client, the first thing I'm going to do on Monday is make a phone call to my advisor and ask, do you personally own crypto? And if you do, how come you haven't talked to me about it?
I love it. I could hear those phones ringing all across America, Rick.
And that's just an illustration of how rapidly evolving all of this is. That's Matt Hogan. He is the Chief Investment Officer of Bitwise Investment Management, and you can learn more by going to bitwiseinvestments.com for all the information and content they have available to help you learn more and stay informed about the world of crypto. Matt Hogan, thanks so much for joining me on the program today.
Thanks for having me, Rick.
Matt and I chatted for almost a half hour. If you would like to listen and watch the entire conversation, yes, it's on video as well as audio, just go to my website, thetruth.ayf.com. Hey, you're listening to The Truth About Your Future. Let me ask you a question. Would you like to buy a book whose title is The Investment Strategies for the Future of All Accelerating at 2030? That's the title of my book, The Truth About Your Future, in Japanese. I'm really excited to tell you that my book, The Truth About Your Future, is now being published in Japan, in Japanese, and it has debuted at number 2. And yes, the literal translation of the book in Japanese is The Investment Strategies for the Future of All Accelerating at 2030. Go figure. Stay with us for more here on The Truth About Your Future.
Allow us to introduce you to Tom, an ordinary person who helped shape the future by putting his money behind the right ideas. Tom enjoys tending to his tomato garden and is currently developing the perfect blend for his homemade spaghetti sauce. Tom is also accessing companies that help change the course of the aerospace industry by investing in Invesco QQQ. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100, which goes to show you don't have to be a rocket scientist to help push progress forward. Become an agent of innovation. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs' risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus with this information. Read it carefully before investing.
Hi, I'm Soledad O'Brien.
And I'm Jean Chatzky.
And we have known each other a long time. And now we're co-hosting a radio show. It's called Everyday Wealth, presented by Edelman Financial Engines. It's coming up next.
Each week, we'll explore the financial decisions that shape all of our lives.
And have conversations about what wealth really means. Because wealth's not just a number. It's all the things we love and want to do.
We're joined every week by Edelman Financial Engines planners. These are the folks on the front lines working with people and their money every single day, plus other industry experts.
And together we're breaking down challenges like generational wealth planning and tax-efficient investing, and looking at issues like charitable giving and caring for aging parents, and much more.
So this is where life and money meet, and we're making it easier to talk about it.
So join us in the next hour for Everyday Wealth, presented by Edelman Financial Engines. You can also find our show on major podcast platforms or at everydaywealth.com/radio.
The Truth About Your Future is sponsored by Global X ETFs. Exponential technologies are transforming the world around us and creating new investment opportunities in the process. But where to start? At Global X, we've spent more than a decade focusing on long-term emerging trends, what we call thematic growth. While many of these innovations are already part of our daily lives, from cloud computing to telemedicine and e-commerce, some of the most important breakthroughs are actually harder to see. The rise of blockchain, lithium batteries, and the Internet of Things represent just a few examples. Despite being less visible today, we believe these and other forms of next-generation infrastructure will be essential to powering our economy in the future, unlocking potential for financial, transportation, and communications networks in the process. Visit globalxetfs.com to learn how thematic investing can complement your portfolio, or ask your financial advisor.
Let's take a call here on The Truth About Your Future. We're talking with Wayne in Chantilly, Virginia. How you doing, Wayne? Welcome to the show.
I'm good. Thank you, Rick. So I do have a question. I'd like to ask, you reference corporate bonds, municipal bonds, government bonds. Can you explain what callable bonds are and how they compare to the corporate, the munis, the government bonds? And, are these callable bonds subject to the same, adjustments in the, upcoming interest rates? Are the callable bonds, something that, an investor like me could have in their diversified, portfolio? And is it something to keep?
Well, it's funny. I haven't talked about callable bonds in 10 or 15 years. Let me see if I can remember how to talk about this. Used to be a big deal, but it's not as big a deal at the moment, and you'll see why in a second. The short answer is this, Wayne. A callable bond is not a different kind of a bond. You mentioned government bonds, corporate bonds, municipal bonds. A callable bond is a feature of one of those. In other words, a corporate bond might have a call feature inside of it. What is the call feature? Well, in short, heads they win, tails you lose. Let me explain what I mean by that. Let's say that you are a corporation and you're issuing a bond. You want to pay as little as possible to borrow the money that you're borrowing. I mean, that's what a bond is, really. They're borrowing money, you're lending them money, and they're paying you interest in exchange. So you might get a 10-year bond from a corporation that pays, we'll say 4% in interest. And given what's going on in the economy, you're happy to earn 4% for 10 years. And the company is willing to pay 4% for 10 years. But interest rates then change. It's a year later, and interest rates have gone down. And that company has the ability to issue a new bond at only 3%. But they're stuck paying you 4%. So what do? They activate their call feature. A call feature lets the borrower, meaning the corporation that issued the bond, the call feature lets them call the bond back. In other words, if you had given them $10,000 for that bond for 10 years, they don't have to wait 10 years to pay you back. They can pay you back today. And that means they're going to replace the debt that they gave you, 4%, with brand new debt at only 3%. If interest rates go down, the corporation wins because they get to refinance their debt at new, lower rates. It's bad news for you as the lender because you were earning 4%, but now they called your bond, you got your money back, you've got to reinvest it at new, lower rates. You were earning 4%, now you're only going to earn 3%. So if interest rates go down, they win, you lose. But what if interest rates go up? Well, remember, the company wants to borrow money as cheaply as possible. If interest rates were 4% and they rise to 5%, the company's not going to execute that call feature. They're going to sit on it because they're going to be happy to pay you 4% for as long as possible instead of having to borrow new money at new higher rates. So if interest rates go up, they win, you lose because you're only earning 4%. If you had bought a brand new bond today, you'd have gotten 5%. So you're stuck with a lower income, a lower interest rate. So if interest rates go down, they win. If interest rates go up, they win. In other words, heads they win, tails you lose. So be careful about buying a bond that has a call feature. Simple as that.
Right. Okay, Rick, appreciate it. That answers that question. Appreciate the input, and thanks very much. Enjoy listening to your new show now.
Well, I'm really glad you called, Wayne. Thank you, and have a wonderful day. You can learn more about call features and buying bonds, the difference between government bonds and corporate bonds, municipal bonds, in my book, The Truth About Money. Time now for everybody's favorite segment of the program, Visit by my wife, Jean Edelman. Jean is a student of the healing arts, Reiki, traditional Chinese medicine, homeopathy, acupuncture, and of course, macrobiotic and plant-based cooking. Here's Jean.
Great to be with you this week. This week I want to talk about being curious. Being curious is eager to know or learn something new. In yoga, we practice a beginner's mind. When we are young, we are so curious. We are always asking questions. We want to know and learn about everything around us. As we get busy with our adult life, we tend to lose that curious nature. We get bogged down with day to day. We forget to look up and look around. We are in survival mode. But when we change a chapter in our life, maybe the kids go to college, maybe we change our job, maybe we get to move to a new city. When that chapter changes, we get a chance to have a curious and a beginner's mind. So this week, I encourage us to sit and think about, what did we like when we were younger? What were our hobbies? Are there classes now that we'd like to take? There's so much on the web. Maybe we want to pick up an instrument that we used to play. Or maybe we want to take lessons on something new. I remembered Rick's dad at 70, he learned to play the piano. How cool is that? What about art? Maybe just find a wall and start throwing paint around. What about sewing or knitting, creating beautiful clothes for ourselves or those that we love? Cooking's always a great area. Learn some new dishes. The beauty of all of this is that the sky is the limit. We can be curious. There's so much to learn. There's so much to experience. And, of course, my word of the week is going to be curious. Curious. The C is for courage, because change is not easy. It takes courage to dig deep, to know that there's no judgment, and to understand that there's no timeline. It's just now. Enjoy. The U of curious is unconditional love for ourselves and for others. It is a time for grace, to not be so rigid, to be flexible and fluid and flow through our daily life. The R is for realistic. Set realistic goals for ourselves each day. We're not going to get it done in one day or 1 week or 1 month. It takes time to bring change, happy, positive, fulfilling change into our life. The I is for imagination. Have fun and be able to sit down and daydream and create our goals for ourselves. The O is for occasion. How about we treat each day as a special occasion? Use the good china, play our favorite music, get dressed up for no reason at all. The U is for unplug. It's okay to unplug and not do anything. It's okay to look at the clock and say, where did the time go? Because we got so interested and ingrained in something that we were doing and was making us happy. It's wonderful to let our mind go and relax and reset. And the S is for simple. As we unwind from whatever it is, simple is better. We don't need to overschedule ourselves. We don't need the stress. It's called monotasking, doing one thing instead of many things at one time. Simple helps us find joy in our day. This will be our best chapter. It will be rewarding because we have wisdom. We have knowledge from what we have done in our life, what is right, what is wrong. We know what's important for us and to us. And so I encourage you this week to be curious. Go find the new in your life and have a great week.
Thank you, Gene. That's Gene Edelman here on The Truth About Your Future.
Do you know anyone who's a new investor? You can help make it easier for them to get started. With the new Schwab Starter Kit, new investors can open an account and get $101 to split across the top 5 stocks in the S&P 500. Those are companies they actually recognize, like Amazon, Apple, and Google. There are also videos, guides, and other helpful tools, plus investment professionals 24/7 to answer their questions. It's Investing 101 reimagined. To see the current top 5 stocks and learn more about the Schwab Starter Kit, go to schwab.com/starterkit.
Want to invest in digital assets but find it all a bit complicated? There's actually a very easy way that you can invest in this new asset class. Simply choose the Bitwise 10 Crypto Index Fund, symbol BITW. It's the first and still the biggest crypto index fund. It owns the 10 largest digital assets and rebalances monthly, so you don't have to decide what to buy or when to rebalance. Bitwise does it all for you. At Bitwise, we want digital assets to be available to everyone, and that's why we work closely with individual investors like you, as well as financial advisors and institutions. At Bitwise, crypto is all we do. If you believe digital assets should be part of a diversified portfolio, take a look at the Bitwise Crypto 10 Index Fund, symbol BITW, available everywhere you get your investments. There are major risks to consider, including the loss of your entire investment. Before investing in crypto funds, visit bitwiseinvestments.com to learn about the risks with these investments.
I'm Rick Edelman. Thanks so much for joining me on the program this weekend, The Truth About Your Future. And remember, I recorded a special urgent webinar, and you can watch the replay. It'll help you figure out what you ought to consider doing for your own portfolio during this period of market volatility. Just go to thetruthayf.com. I'll see you next week.
Good night, and good luck.
As a reward, you'll have no radio for the rest of the week. Go to your room.
The Truth About Your Future with Rick Edelman has been brought to you by Bitwise, the world's largest crypto index fund manager. As crypto grows, Bitwise believes everyone should have a simple and familiar way to access it. Bitwise makes crypto clear. Bitwiseinvestments.com. And by Global X ETFs. For more than a decade, Global X ETFs has been dedicated to providing investors with unexplored and intelligent solutions. Learn more at globalxetfs.com. And by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100. Invesco.com/QQQ. Stay tuned for Everyday Wealth with Soledad O'Brien and Gene Chatsky from Edelman Financial Engines. Everydaywealth.com/radio. EFE and The Truth About Your Future with Rick Edelman are unaffiliated entities.
Get the truth about your future every weekend with Rick Edelman. It's thetruthayf.com.